Retirement isn't just about a big nest egg. It's about knowing if you can make it last. On today's show, we're going to talk about how to tell if you're actually ready to retire. And we're going to go over the 3 questions you need to be able to answer to find out if it's the right time.
It's another episode of Your Retirement Elevated. I'm Walter Stroholt alongside Scott Dugan, financial advisor and the co-founder of Elevated Retirement Group, helping folks all across the country get to and through retirement with success. And on today's show, Scott, I guess we're really boiling things down to their most basic level. Am I ready to retire? Can I do it? Can I pull the trigger? We could probably do 100 episodes about this topic, all from different angles. Today's angle is trying to make it simple. 3 key questions that folks can get answered to find out the answer to that question. Can I retire right now? Am I ready for it? This is good.
And so the goal of today is by the end of this video, you'll know whether you're truly ready for retirement or exactly where your plan still has a few gaps in it. And maybe has a few glitches.
Either way, that's going to be a better place than where we're starting the video. So I'm in. What's question number 1?
So number 1, hands down, do you know your real spending number?
Okay.
And I've been doing this for a long time. This gray hair has been earned over the last 24 years, okay, doing this. So when I began my career, I would just ask people, hey, what do you think you spend? And I would take that as the gospel. And what I quickly found out, and now I know empirically, is that when people just gave me a number without data, that they're usually 10 to 30% off. Meaning
Sounds about right.
They underestimated their spending by 10 to 30%.
Yep.
And that's a wide berth over time that's just not sustainable.
Yeah, we're not talking about a couple of Starbucks drinks.
No.
Yeah.
And so we go through a process, and it takes a little time. For most people, if they have about an hour and a half, and if they go through our checklist and our process and instructions, they can have a really good idea of what it takes, what money is going out of the household for expenses. And then we further break it down to your essentials, which are the must-haves, and then the like-to-have, which is the discretionary. So 2 categories. And so factors that you really want to include in those things, travel, that's a nice-to-have. Healthcare, probably got to have that. Home repairs are going to happen. Inflation, be careful of boredom spending. You saw that during the pandemic, big time. I noticed that FedEx, UPS, Amazon, they do a lot of delivering.
Yep.
Big time. So people get bored, or that's kind of their jolt. So again, give you an example. If a couple plans on $8,000 a month, but forgets to budget healthcare premiums and major home maintenance, like that's a big deal that you don't have baked in there. So again, we take time to go through that, and we're not saying you're going to live on a budget. Our clients don't live on budgets. They don't put cash in an envelope and dole it out for the expenses. What they do is they understand that cash outflow and what's needed, and to give them a good idea of what their consumption rate of resources looks like. Because if we're consuming too much too quickly, that can have downstream effects that can be negative. So a strong plan starts with clarity on your cash flow. And that in our world is a clearly defined written income plan that very few people in our population have in their grasp.
Got to make sure that we take care of that spending problem. By the way, if you missed it in our prior video, go back and check it out. We talked a little bit about overspending, and in fact covered the 3 things that retirees tend to overspend on in their first 5 years of being retired. So we'll link to that video in the description of today's show, and may have it pop up on the screen if you're watching on YouTube, where you can go and watch that video as well. And that'd be helpful to kind of wrap into that conversation and go a little deeper on the spending conversation. But luckily, it's not all about spending, Scott. We've got other areas as well. So what's our second key question to find out if we're ready to retire?
You want to ask yourself, have you planned for taxes, healthcare, and stock market surprises? So when it comes to taxes, that's when you're looking at withdrawals from different accounts, because they're going to be taxed differently. So just like when you put money into an IRA, a brokerage account, a Roth, that's when you're contributing to them. When you withdraw, you're consuming those resources, you're taking them out. And depending on which bucket that money is in, they're going to be taxed differently. So you have to understand what's the best way to do that. From a healthcare perspective, especially pre-65, pre-Medicare, coverage can be very expensive. So you've got to look at what does that cost. If someone's going to be on COBRA, you've got 18 months of carrying your corporate plan over. And so again, that you're going to be paying the full bill on that. So that could be, $1,000, $2,000 a month, depending who's going to be on there. So making sure that healthcare doesn't trip you up, that cost is not a big surprise. And then the other one is markets. A rough first few years can really throw off your entire plan. We've talked about it before in other episodes. It's that sequence of returns. And to think about that, we probably all understand the term dollar cost averaging, because that's when a little bit of your paycheck every 2 weeks goes in your 401k. You're buying when it's up, and when it's down, you're dollar cost averaging in. Well, what are we doing in retirement? We're reverse dollar cost averaging out. Right? And so in our world, we always want to have a good emergency fund set up, and the first few years of retirement in a conservative posture, because then we're not selling our Apple stock when it's down to pay the light bill. Okay? It's a system of refilling the buckets, short term, mid-term, and then our long-term situation. Well, we've got to understand what the role needs and how much money we need to take to set those up. So again, the market's not bad. It's just we need to understand the probability that if you've got a 20 or 30-year retirement, you're going to experience market downturns, because that's just how things work. But over time, it's always worked out, but you've got to have a good contingency plan coming in there. So again, the takeaway from these 3 tripwires, a solid retirement strategy, stress test against all 3 of these areas.
Is your retirement strategy working as hard as you are? Get the answers you deserve with Elevated Retirement Group's information-packed toolkit. Inside, you'll get Scott's book, Exceptional Retirement, along with essential insights covering the 5 key areas of retirement planning, strategies to keep more of your hard-earned money, and how to choose your winning retirement team. Take control of your retirement today. Click the link in today's show description to claim your toolkit at no cost to you.
And that's really the key. We're stress testing these things. We don't expect you to necessarily pass right out of the gate, all 3. Often adjustments are needed. Just like when you get a health stress test, it doesn't mean that you're living a bad, unhealthy lifestyle all the time. But hey, under the stress test, it revealed some areas for improvement. Same kind of idea when you go through that kind of second big question about if you're ready for retirement. All right, we get to the last one here, Scott, which, by the way, before we hit it, if you've got any questions for Scott and his team, you want to get in touch and start talking about to see if you are truly ready for retirement, or if you find out at end of today's video, you're not quite ready and you need some assistance, we've got a link in the description of today's show. You can use that to book a time with Scott and his team to go through a discovery call to see if you're a good fit to work with one another and where those areas of improvement are for your financial plan. So be sure to check that out, whether you're watching on YouTube or listening in any of your audio apps. There's a link in the description for you to follow. All right, Scott, our third and final question. What is it?
Do you know how to turn your portfolio into income, into a paycheck? And people come to us because they've got this number in their 401k, IRAs, wherever it may be. And their biggest question is, how do I turn this into a paycheck? I don't know how long my retirement's going to last. I don't know what the markets are going to do. I don't know what inflation is going to do. I don't know what healthcare is going to cost. How do I distribute this in a way where we can spend confidently, sleep well at night? And that's going to be your biggest challenge. Gone are the days of, a couple Social Security checks and a couple of pensions. And as long as you spent less than the money coming in, you were set. It's on us, all of us, pre-retirees or soon to be retired. You've got to save your way, because your savings is going to be a big component of your retirement paycheck. So when you look at that, the question is the answer. Do you know which account to tap into first? Is it your after-tax brokerage account? Is it your 401k? Is it your IRA? Is it your Roth? All those things need to be dialed in. Now, do you do those in order sequentially, Or do we do it simultaneously, meaning taking a little bit out of each to maximize our taxes and to minimize the effects on those? Do you know when to take Social Security? When does that fit in? How do we optimize your plan and optimize Social Security to fit in an overall plan? And the third thing is, how do you avoid running out of money? That's a big one, because people will come to us. It's not, hey, how much do I need to have in there to this? It's, hey, am I going to be okay? Have we saved enough money? If life throws us a curveball with healthcare, are we going to be okay? Is my spouse going to be okay if something happens to me, if I pass away before her or him? Those are the things that the question people have. A good, solid plan helps you do that. And so again, an example of a recent client that came on board, we talked about our theory or our discovery on go, slow go, and no go. We've talked about it before, but it's usually in 10-year increments. The first 10 years of retirement is usually that go time, be your highest expenditures. Your slow go is usually the second 10-year, and a no go is that last potential time of our life. So it could potentially be around 3 different segments. So we walk through with the client. They're going to have 2 Social Security checks. They're going to have a pension coming in, and they know, because they're trying a little early, from 63 to 73 to 75, that's going to be their go time. They've got bucket list things they want to do. They want to travel extensively around the United States. They've already got their RV. They've got their truck to pull it. They're ready to rock and roll, come next year when they both are retired. And I said, well, you've got your Social Security and your pension, and that covers about 70% of your nest or your requirement. How do you want to deliver that, the rest of it? Do you want that from the market? We can go up and down. Do you want it protected and guaranteed, or do you want a blend of that? And they thought long and hard about it. They said, you know what? We want that thing guaranteed for the first 10 years. We want to ensure the go years, doesn't matter what the markets do. We just want to be spent confidently. So really what they did is they had 2 solid Social Security checks, a solid pension check, and they're adding a 4th guaranteed income stream from a protected account. And so we added inflation and taxes, all of that. I said, that's exactly what we're looking for. When we turn our badges in and our laptops in, we load up the RV and we go, we know that money's going to hit the bank account. And doesn't matter what the headlines say, what's happening with the markets. We feel like that's the right strategy for us. Now, again, that's not going to be right for everyone, but it took a lot of work to get to making the decision. How do you want to solve that gap? And that's what proper planning turns uncertainty into confidence. And that's what I think people really, really want going into retirement.
I got to call you out for a quick second, Scott. I think you cheated on that one, because our 3 questions, well, in the 3rd question, you brought up about 37 other questions. So I feel like you cheated on
3 main questions.
3 main questions on this one, but no, it's a great breakdown. So I'm sure there are folks that, even though we've kind of given these 3 questions, they might still be a little unsure about whether they're ready or not, because sometimes I guess you don't know until you really open up the hood to get those answers. We may know the key questions now, but that's not necessarily the answers.
Oh, definitely. And so if you're still unsure, and if even one of these questions gave you pause, you're not behind. You're just ready for a plan that connects the dots. And we had one of our certified financial planners had a great discovery call from a client up north. And they said, hey, we've been watching different shows on YouTube, and we're trying to figure things out. And they watched one of our episodes on the Big Beautiful Bill, where we dove into our tax planning software and the effects of IRMA and the new bonus deduction, and how you don't want to lose out on that. And they remarked that until they saw that on the screen with the numbers, they said, we've never seen that. No one's ever talked about that before. We knew that we needed to talk to you about our situation. And so again, it's about knowing the right questions, but having the right tools and right planning strategy to get you that to and through retirement. And so again, if you're unsure, just follow the links below, reach out to set a discovery meeting. That's either in our office or Zoom. No cost, no obligation. We'll help you answer those questions so you can retire confidently.
People have been coming in from states all over the place. So yeah, you don't have to be local to where Scott is to be able to work with one another, to be able to have the discovery call. It's really easy to book that time with the team. All you have to do is click the link in the description and you can book a time at your convenience to have a chat, see where you stand. How close are you to answering these 3 questions that tell you whether or not you're ready to retire? Start getting those answers clarified and get on the path to success as you approach retirement. It's all about that. Again, link in the description, click that and schedule your time to visit. And until then, Scott, thank you so much for your help. Appreciate it. We'll talk to you soon.
Look forward to it. Thank you.
For those of our YouTube subscribers, don't forget to like and hit subscribe if you're not already on this video so you don't miss future episodes. And please share this with a friend who you might think would find it helpful as well. Until next time, we'll see you soon here on Your Retirement Elevated.
This video has been prepared for educational and marketing purposes only. The information in this video is general in nature, does not constitute personalized investment advice, and does not provide a complete analysis of the subjects discussed. All investments involve risk, and different types of investments involve varying degrees of risk. There can be no assurance that any specific investment strategy will be profitable or suitable to you. Additionally, although information presented in this video is believed to be factual and up to date, we do not guarantee its accuracy. You should consult an attorney or tax professional regarding your specific legal or tax situation and should consult a professional advisor before implementing any of the strategies mentioned in this video. Investment advisory services are offered through Elevated Capital Advisors LLC, an SEC-registered investment advisor affiliated with Elevated Retirement Group LLC. Registration as an investment advisor does not constitute an endorsement of Elevated Capital Advisors LLC by securities regulators, nor does it indicate that the firm has attained a particular level of skill or ability. Insurance advice and products may be offered by a third-party insurance producer, which may be affiliated with Elevated Retirement Group LLC and Elevated Capital Advisors LLC. Walter Storholt and Third Wheel Media LLC receive compensation for their assistance in preparing and hosting this video.